Hey guys, welcome back to another episode of Market Mastery. You are with your host, Trader Dax. And there's some crazy things going on in the market at the moment. So I just want to do a quick market update for everybody. As we can see right now on the screen, I've got UST, Terra USD, and it's starting to unpeg again. Well, unpeg from that's 85 cents and it's selling off one more time. So obviously we had the unpeg the other day. We had the little one actually a few days ago on the 8th. And I remember posting about this in the Facebook group, and everyone's like, oh, whatever. It's only like 2%. And then it absolutely capitulated yesterday and came all the way down to 60 cents. And it had a really nice rally and pushed back up. But it seems to be that whoever's attacking the system has them in a pretty bad position because they seem to, whenever they want to crash the market, and it's just absolutely tanking the price of Luna, which has now come back down to $10. I thought it was done actually when we came back down to, or sorry, even higher than that, when it came back down to $24. I thought it would like go sideways and, sort of accumulate a bit after that because it already had this absolutely gigantic drop. It was 72% in a day or 2 days. And I thought this was probably going to be the bottom. And then, bear flag, and it's broken down completely one more time, which is another pretty much 70%, right? Now it's at $10.50 and the peg still hasn't normalized. I'm not sure exactly what's going on with the $1.4 billion of Bitcoin that they lent. But the interesting thing that's actually happened is since they lent that money out of their Bitcoin wallet reserves of 1.4 billion in Bitcoin, Bitcoin just stopped dumping all of a sudden as soon as that happened. So if you look on the hourly, they started moving they moved their Bitcoin around about this time when the market came back down to here, and we sort of coming pretty close to 30K. So I don't know what's going on with that. Maybe the market makers who are doing trying to save the peg, maybe they put a price floor underneath Bitcoin, or they're working with a couple of exchanges to put a price floor underneath Bitcoin at the moment to stop that tanking, because obviously the $1.4 billion that they have in Bitcoin is that's what they're using as collateral to hold up the UST. So I don't know how much longer they can keep on doing this before that available capital runs out, because I know they're using as collateral to borrow against. Which I'm guessing they're borrowing USDT or USDC from exchanges and then using that to try and buy UST to push it back up. I'm guessing that's what they're doing, but I'm not 100% sure. But Luna just keeps on getting absolutely annihilated, and now it's down $10.35. So it's very interesting times at the moment. But a few major things I want to look at on Bitcoin, because we're back at a really key macro Fibonacci level. I think it's sort of important to talk about. So let's look at our indicators first. So Nexus is oversold, but hasn't given a buy indication yet. We're putting in a new pivot, and we're oversold on the daily RSI, right? So, typically that's always an indication that we're possibly getting to a position where the market is at least going to give us a bounce, right? And then sometimes you get a bounce and then a roll back over and you get a nice, bullish divergence or something like that. And then you get the actual rally from then. I think that though the rally that we're going to get coming up next, I'm going to talk about this in a minute, is probably not going to come from a chart setup though. It's more likely to come from then the Fed pivots its monetary policy from quantitative tightening to quantitative easing, which we don't know how long that might take. Might take 3 months, might take 6 months, might happen much faster, depending on how quickly the stock market continues to nuke, right? But let's quickly just take a look at what's going on here. And I've got the macro Fibonacci level here, which is from the previous all-time high, 2017, down to the bottom of the bear market. It's given us some really great levels throughout, this entire cycle. So broke out a previous all-time high, had a bit of issues getting through the 1.272, and then we broke out of that level and pushed all the way back up. Well, not all the way back up, but all the way up to 2.272, came back down, bounced off the 1.618, ran all the way to the 3.272, came back, bounced off the 2.8, found the top perfectly. This was put in at the 3.618, crashed all the way back down, right? Found the bottom multiple times. This is a 3-touch bottom on the 1.618. Right, found support here again at the 2.272. And then obviously, it was one of the main things I used to help pick the top when I did back in November when we lost the 3.618 and just cut straight through these key support levels. You can see even here, found a bit of support here, rejected here. And now we're back at this key level, the 1.618. So maybe this holds for a little bit. Bitcoin at a really crucial level. I mean, for me, I would much rather see a sell-off down below 28K to sweep all these wicks through here. Possible sell-off down into this 24, 25 area. Sorry, it's 24 down to 22 area, and then reclaim this level. That's where I would want to be getting in right there on the reclaim of that range low. I think that would be the generational Bitcoin long if we don't get some, complete collapse of BTC down to, under 20K type thing. I think that is going to be, if we do get that set up, it'll be a really good one. And, I'd be looking for 40K to be the target. And then depending on what's happening in the global economic stage, if the Federal Reserve switches back into quantitative easing by that point, anything could happen. We could be looking for much higher. Maybe this continues to go sideways in a trading range until the halving in 2024, but that's a long way out. We don't want to speculate too far in advance and just play level by level. And at the moment, we're on a really key level of support. The NASDAQ also on a really key level of support. We can see back here where the support comes from. And we're bouncing. It's trying to put in a Morningstar reversal off this support. So looking really good there. The issue is, right, SPX doing exactly the same thing, right? Key level support. And we're putting in a really nice Morningstar reversal at the moment, right? So the issue is with this, though, is that the market has been looking quite nice and rebounding overnight into the Asia session. And then as soon as the New York market opens, because this is only futures, right? Doesn't have that much volume. When the real volume kicks in during the day at 9:30 a.m. New York time, the market almost instantly starts to puke and sell off. And we can see that if we look here, right? Especially over the last 4 days of this week, every time the market is open, it's just sold off straight down, sold off straight down, sold off straight down. So if this puts in a Morningstar reversal on the futures and we push up maybe to 4,000, 63, right? We might push up to 4,060 to be around here. And then the market just opens and capitulates all the way back down and ends up closing red on the futures market in the end anyway, and the Morningstar reversal gets rejected. Now, I think the key thing that's going to determine how we close tomorrow afternoon is tomorrow morning at 8:30 a.m., they are releasing the inflation data. Now, this is really important. If the inflation data comes out good for the world, as in inflation is starting to drop and it's lower than what it was last month, I think, the narrative is going to flip to we've seen the peak of inflation and, the Fed tightening is doing its work and, the interest rate hikes is doing its work. And then that could be the beginning of the end of the quantitative tightening phase, which I still think will go on for at least a couple more months, depending on how bad, this crash gets, right? Now, if we might get a relief rally on good inflation data and then it rolls over again. And so levels that I'm sort of looking at are this 3,600 level and then the previous all-time high, right? Which on the SPX, right, currently we're down 18%. Would be down 25% or possibly 30%. I think that is definitely the sort of area where the Fed will seriously be considering kicking back in quantitative tightening, putting in, bond purchases at a much faster rate. So just expanding the balance sheet, probably tapping on the shoulder of their friends at BlackRock and giving them a few more $1 billion or $1 trillion even to make sure that the market doesn't completely shit the bed, right? So that is That's what we're looking for, basically, is when the Fed actually turns the corner and moves from quantitative tightening back into quantitative easing. I think that's when the market will finally bottom and we'll get a strong reversal. But I mean, if we look at some of like our large cap stocks, so like Amazon, for example, Amazon has copped an absolute beating, and it is down 42%, right? So if Amazon's had a 42% pullback, it's, pretty much sitting on, if you look at the futures, it's sitting on key support as well, like the rest of the market. So, I think at least if we go lower, this is probably going to get a bounce, and the good inflation data could be the catalyst to put that bounce in. Now, if the inflation data is bad, we could get a nuke and things could get really ugly quite quickly, and we can start cutting through these support levels. So need to be aware, and I think be pretty vigilant tomorrow, depending on what that inflation data says, and then that's going to react on how the market behaves tomorrow and the close that we get. So possibly potential could be putting in a bottom with good fundamental additions to the market could help the charts get a little bit of a relief rally here. But I don't think we're going to move back into a proper uptrend until we actually start to see a little bit more love from the Fed and a move into quantitative easing from quantitative tightening. And I think that could happen towards the end of the year, because the thing that we need to remember from what's happening in the US is we have elections at the end of the year. We've got the midterm elections. And so the Biden government especially is going to be put under a lot of pressure if the economy starts tanking, because the Fed has done a lot of quantitative tightening, hiking interest rates. Businesses are going bankrupt. They're firing a lot of staff. Unemployment's rising. By that point, we're probably going to have another Q2 is probably going to be negative growth as well, because Q1 was, and the tightening's increasing. So it's going to be even harder to have a positive growth this quarter. I don't know how they're going to pull that off. So it's probably going to be, then we're in recession territory, right? And how do you think the voters are going to go voting for the current party if we're currently in a recession after their first term? So, after their first 2 years in office. So I don't think that's going to be biting too well. So I think the Biden government is going to be putting a lot of pressure on the Fed to switch the focus from inflation, which currently right now, the focus of the Federal Reserve is on inflation and getting that down as quickly as possible. I think what we might see is once that actually starts to happen in the market, if we start to crash quite dramatically, inflation will come down because there'll be a lot of demand destruction. And then the pressure is going to flip to unemployment. The pressure is going to flip to what's happening to growth. And then when that happens, they're going to flip their hat back to quantitative tightening, and the money printer is going to go burr. And I think that's when we have potential huge upside for things like Bitcoin, because that's when the inflation hedge actually kicks in and starts. Everybody always asks me about, the inflation hedge, right? The inflation hedge for Bitcoin was back here when, COVID absolutely nuked. And then they came out and they said, we're not going to let it continue to sell off like this. And we're going to put controls in place. We're going to start massively increase bond purchases. We're going to get BlackRock into the game, and we're going to lend them trillions of dollars, start putting purchases into the stock market, right? And the stock market went absolutely nuts. And what happened to the price of Bitcoin, right? Over the next year, pretty much, and went up 1,200%. So I believe similar sort of action is going to happen the next time we have the inflation hedge, that is the inflation hedge right there, right? The 1,200% that percent increase that we got when they started printing and really kicked in QE. We're going to have the same thing happen next time we kick in QE. That's when the inflation hedge starts. The inflation hedge doesn't start when we're up here and, the government comes out and goes, oh, inflation isn't transitory actually. And, it's above 6%. Oh, it's above 7%. Oh, it's above 8%. Oh, we're not going to be able to get rid of it. Now we have to go into quantitative tightening. That's when all assets are going to sell off. When the Fed goes into tightening mode, risk assets are going to sell off. When the Fed goes into quantitative easing mode, the dollar's going to devalue, and risk assets are going to find it much easier time moving into bull markets. So hopefully this can if the crash is bad enough, I believe this could put in the I don't want to say generational bottom, but the cycle bottom for the stock market. If there is a bad crash and the Fed does flip back into quantitative easing, we could have a potential bottom like the 2008 bottom. The last time we had a bottom was in a cycle bottom was in 2008 when we had the Great Recession. And that was a year and a half, almost 2 years, I think, that we had contraction for, and then they managed to reverse it. But if you go back and you have a look at any of the comments by any of the members that worked at the Federal Reserve back then, they said the biggest thing that they messed up is that they didn't take action fast enough. So I think they're going to take action a lot faster. I don't think that we're going to get a 55% pullback in the NASDAQ and the S&P and stuff like that, like what we had all the way back in 2008, right? So I just show you guys here. Right, it was almost 2 years, 513 days, so a year and a half, and we pulled back 57%, so almost 60%. I don't think that's going to happen because a 60% pullback from where we are currently right now is pretty much the COVID lows. I don't think that they're going to let that happen. If it comes back down, even to here, 3,600 or the previous all-time high before the COVID crash, I think they're going to step in with quantitative easing quite rapidly, right? And they're going to protect the market, because otherwise, you end up, you go from inflation being the problem, and now nobody has a job. You're in a really bad problem. We end up with probably deflation and stagflation, and that's a horrible position to be in. So I think they're going to keep on kicking the can down the road, and they're going to go back and forwards. They're going to go back and forwards in between quantitative tightening and quantitative easing. Maybe we have a few shorter cycles, unless they let this one play out for a little bit longer. They did say that they're going to continue raising interest rates and tightening until inflation hits 2%. I don't think inflation is going to hit 2% very quickly, but I think the market is going to nuke pretty hard before inflation gets to 2%, and the Fed's are going to have to change their policy and swing us back into quantitative easing before then. So that's pretty much it from me tonight, guys. Going to get off to bed, but yeah, go and have a look. It's going to be 8:30 a.m. New York time, so it's an hour before the market open. The inflation data is going to come out, and I think that will affect on how the market plays out tomorrow. If it's positive, I think we get a really nice bottom get put in here, Morningstar reversal set up, and that can take us back into a nice little rally, back into a little bit more of a normal range, and that can kick the can down the road for a little bit longer. Maybe we get a rollover later in the year, sometime in Q3, and then that's when the Fed changes plans and we go back into QE, and then we get the final bottom. I think something like that would line up really nicely for a run into the elections or after the elections, and then also for the back end of the year for Bitcoin as well. So the last thing I wanted to quickly show you as well is this falling wedge it's potentially setting up as well. So maybe it comes back down, sweeps the low, and then comes back in here and plays sort of like a little bit of a bump and run, sweeps the range low, and then we come back up at least to the mid range. Who knows how that's going to play out, but just a little bit of an idea that I wanted to float. Still early in the game, but if we do get a rally here and a strong daily close tomorrow, we could come back up to 2.272, then back down to the bottom of the range, maybe even sweep the low and then take off from there. So that's all from me tonight, guys. Thanks a lot for tuning in. Give us a like and subscribe, and feel free to ask any questions.